This lesson goes over the basics of debits and credits. Before we start, I want to emphasize that you don't have to know the debits and credits to function in QuickBooks. In fact, that's one of QuickBooks' strongest selling points. It provides users with little accounting experience the ability to perform many basic and some fairly advanced accounting entries without having to know the journal entries behind them. But it is helpful to know what goes on behind the scenes in QuickBooks. Our goal for this video is to give you some basic background on debits and credits, which will be useful for our next lesson when we go over the QuickBooks interface. These tables are the typical way that debits and credits are taught. In fact, I scanned these in from some old books I had lying around. Sometimes referred to as cheat sheets, they're supposed to provide you with a quick reference to look up a transaction and find out the net effect on the accounts involved. I've never really found much use for these. If you're working in QuickBooks or any other accounting software, do you really want to stop and look up a transaction on a table? Instead, I'll provide 3 methods I use when I'm challenged by a transaction in QuickBooks and want to investigate the debits and credits behind the scenes. The accounting equation is the original old-school method for deciphering a transaction. It's what I fall back on when I need to take a step back and determine what account should be increased and/or decreased. In other words, which account should have been debited or credited. The original equation is assets equal liabilities plus equity. Within this equation is the answer to every potential transaction problem. Since the two sides have to always be in balance, the debits and credits will always offset each other. Looking at the equation in its basic form doesn't appear to include the income statement accounts, but net income, which equals revenues minus expenses, is a part of equity. So to better illustrate that, we'll expand the equation. Here's the accounting equation modified to include all of the income statement accounts. Within this equation, all of your accounts are represented. Part of equity is net income, revenues minus expenses. In this case, we're using owner equity as in the case of a sole proprietorship. For partnerships, LLCs, and corporations, the accounts in the equity section will have differing account titles. On one side of the equation are assets. These are always increased with a debit. Bank accounts, accounts receivable, inventory, and long-term assets increase when a debit is directed at those accounts. So conversely, these accounts are always decreased using a credit. It gets a little more complex on the other side of the equation. First, liabilities and equity always increase with a credit. So accounts payable, long-term loans, and money an owner puts into the company are all increased with a credit and decreased with a debit. But also part of this side of the equation is the summation of the income statement. Your net profit is increased in the equity section by a credit. So since net income is the product of income minus expenses, equity will increase for revenues with a credit, and equity will decrease for expenses with a debit. The equation in this form will help provide you with an explanation of why QuickBooks does what it does. For our next 2 methods, we'll go inside of QuickBooks to get a better understanding of the debits and credits. Method 2 is a way to visualize debits and credits and their inverted relationship. Let's go inside of QuickBooks and take a look at 2 of our financial statements, the profit and loss and the balance sheet. Here in QuickBooks, I want to close out the home screen and I'll go to the report menu. We'll select Company and Financial, Profit and Loss Standard. The line divides the revenue accounts from the expense accounts, in between total income and cost of goods sold. All accounts above this line are increased with a credit, and all accounts below the line are increased with a debit. I'll minimize this report, go back to the report menu, Company and Financial, and we'll bring up the balance sheet standard report. On the balance sheet, the dividing line represents the difference between asset accounts and liability and equity accounts. The accounts above the line are increased with a debit, and the accounts below the line are increased with a credit. And notice if I scroll down to the bottom, net income is included in the equity section on the bottom of the statement. To view both statements at once, I'll go up to the Window menu and select Tile Vertically. With the statements lined up this way, you can see the inverted relationship between them. Debits increasing assets and expenses, and credits increasing liabilities, equity, and income. Control Y is a QuickBooks secret weapon. It allows the QuickBooks user to peer behind the scenes and look at which accounts QuickBooks used for the debits and the credits. Let's bring the home screen back up and open an invoice. I'll click the previous button so we can view an invoice that's already been entered. To see the debits and credits, we can hold down Control on the bottom left of the keyboard and press Y. Here we can see that this invoice debited accounts receivable, increasing the balance of that asset account. In order to balance the transaction, it credited an income account, increasing the balance of that account. Going back to the invoice, we can see how QuickBooks directs the debits and credits. The total on the bottom of the invoice is directing a debit to the accounts receivable account, and the amount listed in the table is directing a credit to an income account. Use Control Y frequently in order to obtain a strong grip on how QuickBooks operates behind the scenes. It is an invaluable tool in not only learning how QuickBooks operates, but in diagnosing problems with your transactions. I'd like to emphasize again that you don't have to memorize debits and credits in order to use QuickBooks. The forms that QuickBooks uses for each type of transaction will guide you through the accounting. But in order to really understand what's happening when you select an icon from the home screen, it helps to know what's happening behind the scenes. This will become more apparent in our next lesson when we go over the QuickBooks workflow.